Good morning, welcome to IG's early morning call. It's Tuesday the 18th of July. Let's take a look at the headlines as we await the start of today's European session, where we're looking for some small declines on the back of yesterday's close. The Hang Seng, though, taking the headlines today in terms of some of the moves on the indices, is tumbling, coming back in the market after yesterday's break in trading because of Typhoon Talim. Today, we are down more than 2%. It's winding in what we saw yesterday in that poor Chinese data. Meanwhile, earnings out in the last half hour showing that Ocado has returned to profits. The guidance is unchanged though for the full year. These are half-year numbers coming through. We'll get some detail. And US earnings out later on today. Part of why we got a bit of a hesitant start in the European markets. I think people are really waiting for Bank of America, Omnicom, and later on still in the week we've got the likes of Tesla, Netflix. Quite a big week actually for earnings in the US, but Bank of America, one of the highlights this morning before the market opens. It's an all session stock on the IG platform. Let's take a look at volatility, creeping up over the last couple of days or so, but it is just off those recent 3.5 year or so lows that we've got for volatility. But today it's really difficult to get a bite on just precisely where we're going. In fact, you can see after yesterday's very thin candle body on the 24-hour markets, and indeed on the cash session as well, there wasn't really much move overall. We saw declines across the board, as we'll see in just a minute. The French markets were the underperformer, but today we're a little moved on from where we closed out yesterday's session. German DAX, same sort of thing, very, very small, thin, tiny candle, indicating that traders are just awaiting for some further indication of where we go from here. But as I said yesterday, the French markets down over 1%. I think it's almost 1.4% on the cash session yesterday, and the biggest candle across the European markets yesterday by some margin was seen in the French session, with declines across the board. Interesting to see what was going on. One of the big stories we were talking about yesterday was Casino, the fifth largest supermarket chain in France. It's finally found a buyer. That was up 6% on the market, but that didn't seem to impact on the move, particularly on the French session yesterday. So green candle actually today. We're up just a small tick on from yesterday's 24-hour market close. So I think some are looking to retake a slightly longer position as we go into the start of today's trade. But if you look at it on a 30-minute candle chart, we're still looking at some slight declines at the beginning of today's session. Let's catch up with what's been happening overnight in the Asia Pacific markets, because I said one of the big markets that I wanted to follow up on was what's been happening in Hong Kong. The Hang Seng Stock Index down 1.9%. It's been down as much as 2.5% in the session in today's trade. Losses across the board for the sectors, broad spread in the sectors on the S&P ASX 200. Nikkei 225 was one of the few markets where we saw gains. I want to show you this chart. This is the Hang Seng Stock Index. Yesterday, the markets, because of that typhoon, the markets were out yesterday on the cash session, but the 24-hour markets were trading little move. Today you can see pick up on the downside as a result of that poor China data yesterday. Wall Street closed late last night. We saw gains across the board on the markets. Remember yesterday we were talking about the session on Friday where we just saw the Dow rise and S&P 500, Nasdaq on the way down. There's been some of the repairing of the, let's call it, damage on the markets at the back end of last week. Nasdaq returning to some sort of positive form with a rise of almost 1% on the session in yesterday's trade. And in fact, if you look at what's been happening on the 24-hour markets, you can see that in fact in the session yesterday we saw a new punch higher to a new higher high that we've not seen in the markets there since we were all the way back to January 2022. So something like around about 18 month highs closing in on that level for the Nasdaq, as we see money continuing to go back into this market. Let's get rid of that fib just to give us a little bit more of a clearer picture as to what's been happening. 24-hour markets opening pretty much the top of yesterday's close on the session yesterday. Just wanted to take a look as well at what's happening with the broader market index, because again, like the Nasdaq, we saw a new move up, 17.5% up from the lows that we had at the beginning of the year. This market is now at levels they're not seen since the 5th of April. So you can see money going in across the board in the US session. I want to talk about some of the economic data out overnight. So it's just one of the data points to watch out for was the minutes that released meeting of the last Reserve Bank of Australia get together on the 4th of June. It showed the board considered raising the cash rate by 25 basis points to 4.35% before deciding on a pause, which is what we got. The board decided that policy was restrictive enough for the time being, but still considers some tightening may still be required to bring inflation down. We've been seeing a lot from central banks about this sort of strategy in beginning to start to pause, just to see what sort of impact the rate rises that we've already had over the last year are having on the economy. And it's right, because the central bank takes anything between 4, 5, 6 months to see the effects of some of the moves. The RBA members noted a pullback in inflation, but also identified a risk that economic growth slows more than expected, giving concerns about the fact that the rising interest rate picture is putting more burden on households. But of course, that's exactly what monetary policy is meant to be doing. Let's take a look at a quote, because members observed that there was considerable uncertainty about the resilience of household consumption, and that the squeeze on many households' finances could result in consumption slowing more sharply than implied by current forecasts. So I want to show you what's going on with the Australian dollar. This is not much move, actually. You can see we're under the 200-day moving average, currently trading at 68.33. So we've seen some sort of a bottoming out on from the declines we've seen for the Aussie dollar over the US dollar in the last couple of days. But I think, to be honest with you, it really is all about what's happening with the US dollar more than anything else. As a result of that, staying on the chart, I just want to take a look at what's happening with the Aussie against the New Zealand dollar, because this is the way to test what's happening outside of the influence of the US dollar. And you can see the Aussie is up for a second day in a row against the Kiwi. How much of that is as a result of the minutes, not entirely sure, but just to give you an indication that there is money going into the Australian dollar. And in fact, we're pretty much at the top of the candle, indicating there are no sellers there at that point at the moment. Quite a few stats expected today out of the States. Some important ones, and in fact at 1:30 we get retail sales expected to rise by 0.5% in June month on month. We will be covering that today in the Beat the Street update for you at 1:30, which is what we cover every day now on the IG platform. I'll get some more details on that in just a minute. 2:15 this afternoon, industrial production expected to remain flat month on month. And then at 3 o'clock in the afternoon UK time, we get the NAHB housing market index, seen rising to 56 in July. Meanwhile, in Canada, consumer prices forecast to rise by 3% in June year on year, after a 3.4% rise in the previous month. Core CPI seen at 3.6% year on year. That should be 3.4% in the month of June. Last week, the Bank of Canada, I'll show you what's going on with the US dollar traded against the Canadian dollar, because we have seen some movement recently. And in fact, you can see as of Friday's trade, we've seen the lowest print for the dollar against that stronger Canadian since the 13th of September. Last week, the Bank of Canada raised the target rate for its overnight lending by 25 basis points to 5%, considering that a stronger than expected consumption and stubbornly high labour markets were supporting inflationary pressures. This US dollar falling against the Canadian indicates the thinking that the Fed could soon be done in raising interest rates. Now, this has had an interesting effect on the dollar. This is the dollar basket. In the last couple of days, we've seen a new intraday low print, not seen there since the 1st of April. But in fact, in today's trade, I think I'm right in saying that we've got another push higher. Indeed, we've got another new high not seen in this market since the 24th of February. So you can see that the euro is continuing to outperform against the US dollar. The fact the dollar basket is sort of measuring where it's been over the last few days takes into account some of the lackluster movement for sterling, for example, against the US dollar. It is only the euro which is up strongly against the greenback. A quick look at what's happening with the Japanese yen. Same sort of thing. We've got that sidelining at the moment for the dollar yen as well. So it is just the euro dollar which is showing some upside. Let's take a look at some earnings. Ocado out with numbers half an hour ago or so. Certainly a stock to watch at the start of the day's trade, and I think potentially looks pretty good. Group revenue up 9%, 1.4 billion. Technology solutions up 59%. Now, this is really what Ocado is all about. It's about its technology, and it continues to expand that part of the business. Ocado logistics, if you get a delivery from Ocado, that's exactly what this is. That's up 2% in terms of overall revenue. Ocado retail up 5%. Group EBITDA, now this has come through with a loss before tax of 289.5 million. Now that is the pre-tax loss But the group EBITDA has come through at £17 million. Now, this is the return to profit. Now, the reason why we got that loss before tax is because that is the depreciation and amortization and exceptional items to give a loss of that 289.5 million. Revenue, as I said, up 17%, 1.37 billion. The guidance is unchanged for the full year for Ocado. So let's take a look at what we got for the share price. Long-term picture. This has been this is a well-trodden path for reporters and how difficult Ocado is finding things. But in fact, if you look at what's been happening recently, this is becoming a rather interesting little trend that's in place today. And I'm wondering whether perhaps maybe we've got a continuation of this. Let's take a look at the high point there. Up 84% we saw at the high point we saw back on the 22nd of June. This move up has been since the lows we had back at the beginning of June this year. So this is about a 6-week move or so. We're now comfortably above the 200-day moving average. 2 days of losses. I quite like the look of today's trade. So let's imagine that we want to set up a trade on the upside. If there was a long trade to be had here, that's not a trade recommendation, but I'm just talking about this in the context of what we've seen this morning from the company, which I think on the whole will be appreciated possibly by the market. 2 days of losses, starting at 580. If you were to go long on this, your stop goes below the 550 level, which would take you below the 200-day moving average, just in case there is a move that takes it on the way down. But the company has said lower cost reductions across the group, operational efficiencies, lower support costs. I think this all adds up, plus the fact it's gone back into profit at the EBITDA level, which should possibly see some small gains at the start of the day's trade. The only thing I would say technically down here, we've got this MACD, the moving average convergence divergence signal indicator. You can see when this blue line crosses the red dotted line, technically it enters a phase of bearish trading. You've got to consider that in the context of fundamental analysis. The fundamentals this morning, I think on the whole, point to a somewhat better than expected outcome for these first half numbers. Of course, there's still a lot to go. And indeed, we already know, don't we, that the economy is showing some signs of some softness, and people are directing their spending in certain areas into more competitive pricing areas for food and important groceries. So can they continue to afford Ocado? Well, we'll have to see how things develop. But at the moment, at least, it looks as though these numbers out from Ocado have been pretty good on the whole. Let's move on to take a look at another stock worth watching. This is Novartis. This is the French-Swiss drug maker. It will open at 84.90. It's trades in the Swiss markets. Novartis raising its full year outlook. It's also announcing a new $15 billion share buyback program, which potentially could have an uplifting effect on its shares this morning. It'll open at 84.90 on the Swiss markets. Your stock goes below the 200-day moving average if you are long on this stock as well. Now let's wind the clock forward and take a look at one of the companies worth watching this morning from an earnings perspective in the US. That's Bank of America. It will resume today with before the bell numbers from BOA. The bank is expected to post earnings of 84 cents a share. Now that would be a 15% increase from the same quarter this time last year. Revenue forecast to rise around about 10% to just over $25 billion. The only thing I'd say is that looking at these metrics, we got some good figures out last week, didn't we, from Citigroup, from JP Morgan Chase, and from Wells Fargo. The only thing I'd say is we ended up there. I think Wells Fargo was down 4%. I think it was 4.1% on Friday because of concerns about the outlook. So I think that's really all going to be about the rest of the year. These are second quarter figures from Bank of America. Let me take a look at the share price chart. That's the direction of travel. One would have normally expected these companies to benefit from rising interest rates, but because of the big drop in trading, the big drop in mergers and acquisitions, the big drop in companies seeking more money in the markets, it's highly competitive out there. So what little business there is out there is being driven down by companies wanting to try and make the most of an opportunity to take what little business there is out there. So it's driving down prices, but that's what the market does. Today, we will open at 9 o'clock this morning on the IG platform. All sessions at $29.61, ahead of the earnings out 2 or 3 hours later on today. Also expected, just to remind you, there's some other companies as well. BNY Mellon, Bank of New York Mellon, second quarter, earnings per share $1.22 on revenues of $4.3 billion. Omnicom is out this morning as well. Second quarter expectations, earnings per share $1.80 on revenues at $3.67 billion. And Lockheed Martin, second quarter expectations, earnings per share $6.45 on revenues of $15.92 billion. I'm going to be looking at interest at Lockheed Martin numbers. This is a company which specializes in the defense sector, military obviously, but defense sector particularly. And there's been a bit of an uptick in spending in that area, especially since the beginning of the war with Ukraine and Russia last year. So it'll be interesting to see just what Lockheed Martin tells us about its outlook as a defense company. Now, on Wednesday, tech stocks join the earnings party. Tesla, Netflix, IBM, all reporting tomorrow after the bell. Yesterday, my colleague Angeline Ong, in her new show on Beat the Street, talked to Tasty Live's Liz Deaking, who is eagerly awaiting for these reports, especially the second quarter numbers from Netflix.
Netflix is like the wild, wild west. So that's the one that'll give you the biggest kind of bang for your buck, or usually surprises. So Netflix can kind of go in any direction. Tesla, all eyes will be on this week just because it's Tesla. Everybody talks about it. It's a very, very good product. But the volatility of Tesla is not necessarily as high as it is in Netflix. That's got an implied volatility rank of about 19. And Netflix is going to be where you're going to get your biggest vol collapse, because that's got about a 32. So we really kind of look at the volatility, because with efficient markets, we believe that the numbers actually tell the story more than anything else.
Liz Deaking yesterday talking to Angeline Ong, and you can catch up with Beat the Streets every day at 1:30, and we'll start off today's show with a look at the US retail sales numbers and working out some of the trading around that. That gives you the edge on the markets by looking at the output at IG, because we do look at trading. Now let's take a look at what's going on with other areas of the market. Just want to quickly update you as well on this chart here, which is Brent crude on the way down. Or in fact holding yesterday's losses on the way down yesterday. We're now trading below this line of support at 85.52 prior support, which are the highs we had back on the 24th of May. I think the last couple of days really all been about what's happening in the Chinese markets with growth. Lack of growth means lack of demand in the area of oil. And a look at gold, what's happening there. Dollar down again today, as we've been seeing, gives it a little bit of an uptick in the price of gold, not too far away from recent highs at 1960. That's it from me. Ocado at the top of the hour, do watch out for that. And also Novartis, two stocks to watch at the beginning of today's European session. We're still looking for small gains, small losses, I beg your pardon, across the London markets. But that possible uptick in both Novartis and Ocado could be some of the stocks to watch in the session today. And we're back then at 10:30 with Charting the Markets and 1:30 for Beat the Street.